Thank you. Great. Now, so welcome all. Welcome to Financial Fitness Program. My name is Samir Bapat, and today this is I think the fourth or fifth session after we had a full day session. So we covered for last three sessions. We had a trilogy of candlestick patterns. So we studied about what is a candlestick pattern, how the candlestick pattern is drawn. It's a fight between bulls and bears. Then we understood the reversal patterns, and then we understood the gaps. So that three combined, that made the a sort of a good package for candlestick, a good for a beginner to start with to understand the price movement. Today, today on coming Tuesday and Thursday. It's again a trilogy that I'm trying to share with you all. So why I'm sharing right now is this is the first time I'm sharing because I want to establish a connect between the three sessions. So whatever we learn today, whatever we learn on the coming Tuesday and whatever we learn on coming Thursday. So in next three sessions, whatever we learn, it's a combination of three things. So you have to understand all these three things as one after the another. So today is the base. What is the basic price movement? How the basic price movement behaves? Basis this, we will have a support and resistance is created. We'll understand support and resistance. Once we understand support and resistance at a higher level, then again we will understand accumulation and distribution phase which happens in the stock market, so that we'll be able to take trading decisions. So whoever is joining right now in this webinar, make sure you are attending today, next and next. Everyone okay? Am I clear? Can I have yes from all of you if you are okay with whatever I said? The message is loud and clear. You cannot skip any of the sessions. Okay, so let's go ahead. Let's move ahead. So now there are four phases of stock price movement. That's why I said you need to be with me for next three sessions if you want to really imbibe the essence of the price movement. Because all we are trying to do is we are trying to learn the language of the charts, the technical analysis, right? So we are trying to understand what the charts are telling us, and charts by movement, it tells us a lot of things. So we are trying to learn what the chart is telling, because news channels might hide something from you. You might not be having the capacity to read all the news, assimilate and make sense out of it. But charts will quickly make sense out of things for you and present it to you. Only thing is you have to learn how to understand that. That is the whole agenda of our learning technical analysis. So the basics are, there are four phases of stock price movement. So price, any share, any instrument in the world moves in four phases overall. The phases are, it will either go up, then once it goes up, see there is a okay, accumulation distribution, we will find out. So I'll just share with you what is the distribution. So there is an uptrend, the price goes up, it moves sideways, it does not go anywhere, it just stays there. So sometimes it will go up further or it will come down. So let's say it goes uptrend, after uptrend there is a likely possibility of distribution. We will go through it more about distribution, the psychology behind distribution, and how we can identify it. Then the stock may come in a downtrend. Once it comes in downtrend, there is accumulation. So we are going to understand the accumulation phase and the distribution phase on next Thursday. So today is for the basics. Now, before we proceed further, okay, now before we proceed further, I have a question for every one of you. I have a question for every one of you. Now think carefully. Okay, that is one thing. Second thing is, don't worry about if I ask this question, uh, people will immediately jump no manipulator. Let's assume there are no manipulators. Let's assume the market is efficient market. The market reflects the reality of whatever is going on. Everyone can see that whiteboard in front of you, white screen in front of you. Like if I'm scribbling, you can see my scribble. Yes. Okay, great. My question to you all is this. Think about it. Okay, question is this. Let's say today is 2022, 2022 February. Okay, about to start. The share price is 100 rupees for any given share. Let's say the share price is 100 rupees for a share X. The company X, the share price is 100 rupees. After 5 years, which is 2027, okay, please excuse the beautiful handwriting I am putting here. The share price will become 200. Okay, when? In 2027. So today is 2022. In next 5 years, the share price will become 200. Okay, so how it will happen? If I buy a share at 100 rupees today, and if I look at the share price after 5 years, how is it possible, under what circumstances it will become 200 after 5 years? Is my question clear? Today it is 100. After 5 years, how it will become, the share price will become 200? Okay, so Jitu is saying growth in business, great. Business growth, generating revenue, and therefore value being built. Fantastic. Okay, now if it has to become 100 to 200 in 5 years, what is the approximate growth rate the company has to perform in 5 years, so that at least it will become 200, share price will become 200? 14 to 15. If company is growing 30%, the share price is going by 30%, in 3 years it will double. 15% GGR, right? So after, let's say after 10 years, if it has to become 300, then, so let's say there is no 200 here. Okay, I'm now my question expands to straight away to 10 years. Now I'm saying, okay, in 10 years, if a share price has to become from 100 to 300 by 2032, what should happen? Right? Do we all agree? Only and only for a company which is growing year over year, year over year, maybe blip here and there, it has to grow for 10 years for the share price to go up. If the company is not growing, rather it is having losses year after year, will the share price grow from 100 to 300 for that company? If the company is showing loss, then will the share price go up or it will go down? It will go down, right? It will not go to 300 in 10 years. Praveen, I'm not talking of 1 day, 2 day, 10 day. I'm talking about 10 years. In 10 years, in an ideal condition, if a company is showing losses every year, will the stock price go from 100 to 300? Right? No. Right? In 10 years, it will not go. It will remain flat. It will not go as a trajectory, right? So let's bring in this trajectory also. that this, it will not go with the trajectory. Maybe it will go like this, like this, like this. Suddenly it might go, right? That is one possibility. Now, okay, so let's say, can I have yes from all of you? Type yes if you agree that if company grows by 15%, the share price will also grow by 15% over the year. Every year, if the company is growing 15%, 15%, 15%, there is a good chance that company is good. And if I buy a share, it will grow 15%, if the 15%, 15%. Yes. Can I have yes if we all agree in principle that if a company is good, growing 15%, it is going at least 15% increment, it will happen, some here and there. Now, my question is this: if we are in ideal world, okay, if the price is 100 today, if the price is 100 today in 2022, okay, so this is the starting point. The price is the year 22, the price is 100 rupees. Ideally, when the year 2023 comes March, and if company has grown by 15%, then the share price should automatically become 115, right? Correct. In 24, it should become 15% of 115, so it should ideally become like this. So it should become in the trajectory. Ideally, the price should reflect the growth path of the company in an ideal world. Correct. In an ideal world, we should not be worrying कि अरे ये है वो है, and the company is growing. If I buy a share after 1 year, by default it should be 15% higher. But does it happen like that? No, right? It does not happen like that. The price, what will happen is it will go up, come down, go up, come down. So the trajectory is like this. See, now we have to understand this thing. Let's say a company is growing by 15%. Ideally, this is the trajectory of its price going up. In an ideal world, as the company grows by 15%, this should be its trajectory to grow. The share price should also go up like this, but the share price, we will see it will go up, then it will go sideways, then it will come down, then it will go here. It is something like this, again go up, again go here, go down, something like that, and it will fluctuate around the expected trajectory. But in actual, the share price goes up, comes down depending on the mood of market and all that. It goes up, comes down, goes up, comes down. If a company, even if a company is good, the market keeps fluctuating up and down. Agreed? How many of you agree that this is how the market goes up? Though ideal world, it should go in a plain trajectory, but it will go up, come down, go up and come down. So as an investor and trader, okay, why I'm stressing on this point is because we are starting on the foundation of the price movement. As an investor or as a trader, even if you're a long-term investor or a short-term trader, you have to understand the psychology behind why it, though ideal world, it should have gone like this. In ideal world, it should have gone like this, straight in a trajectory, every year just 15%. It should not have fluctuated up and down. But in the real world, it goes up, goes down, goes up, goes down, goes up, and goes down. Why? It happens, right? That is what we have to understand. This is because the primary reason is the stock market is a culmination of all good characteristics of people and bad characteristics of people. People have greed, they have fear, they have apprehensions, they have requirement, they are wise, they are whatever we say, all types of people come, and it's a uh, amalgamation of all types of people. Now tell me one thing. If if now let's understand this step one. We have understood that it's not an ideal world. The price goes up and down. Actually, in ideal world, it should go straight. In real world, it goes up, it goes down, it goes up, it comes down. Now, just tell me, just imagine, okay? Now this point is again 100 rupees. The company is excellent. Ideally, in 1 year, it has to become 115. Okay, and ideally in 4 years, with as per the company growth plan, the share price will become 200, because the company is growing by 15%. There is no as such hindrance, and all we know it is good. Like basic industries like roti kapda and makan, what we say, right? If they are making bread and butter, the requirement will be there. Whether corona or no corona, people will eat, right? So if a company is a food company, it is likely to grow by 15 years, able to sustain for 15 years. Now my question is, are the people who are in the stock market idealistic? They are not. How many of you feel that if in 1 year, if the share price ideally based on the company will become 115, and in 5 years 200, many people down the line will be ready to pay the price of 120, and then they will say, yeah, I am ready to pay 120 because company I know it is very good. ये कंपनी बहुत बढ़िया है, इसका बिजनेस मॉडल इज वेरी गुड, इट इज बहुत बढ़िया है, इसका 3 साल में in 3 years it has to become 200. I am okay paying 120 also today, because in it will give better results than my FD and all that debt fund, liquid fund, everything. So even today, even if after 1 year, ideally the price will be 115, within 6 months, if I identify many people, will you find around you will be ready to pay 120 also? ठीक है यार, 120 pay कर दे, I have to hold for 5 years, I am ready to pay 120 rupees. Few will, right? But they know the company is growing by 15%, but they are ready to pay higher price. Correct? Some people will say, okay, after 120, the price comes to 115. They know, yes, 1 year before the price was 100, but and today the worth of the share as per the company's growth is at least 115 rupees, but they will still not pay 115 rupees. They will wait for it to further fall, and when it is coming to 110, they will say, हाँ यार अभी थोड़ा सस्ता मिल रहा है, now it is cheaper, I will buy now. And those people, ideal world, they should have brought at 115, but still they wait for it to go down and buy at 110. The person who has bought at 120, he is also holding because he is looking for 200. Person who is buying at, he is not buying at 115 and he is buying at 110, is also happy because he says, यार मेरे को थोड़ा discount मिल गया. So ideally he should have bought at 115, but he will say, take it थोड़ा और नीचे आने दो. Right? So some may wait for it to go down. Correct? So we have seen two types of people. One, see, and this is actually happens in the stock market. Okay, everywhere, anywhere in the business, people, some people you will find they'll say, नहीं यार मेरे को पता है ये आगे जाएगा, ये धंधा बढ़ेगा, आई एम रेडी टू पे लिटिल हायर प्राइस, पर आज खरीद के बैठ जाता हूँ, कल हो सकता है और ऊपर चला जाए, I want to buy it today, right now. So they will invest their money right now. Some will say, नहीं यार अभी तो थोड़ा सा नीचे गिर रहे, तो मुझे पता है इसकी वैल्यू 115 है, but if it falls down further, I am really happy. So I'll wait for it to fall down from real value and come to more attractive valuation, and then I will enter. So they will start buying at this place. So you will have three types of people in the market. One was ready to pay higher price, one who are ready to pay nominal price, one who are having patience to buy at a lower price. And that is the reason why the price, because of these three types of people, the price will keep on moving up and down along the mean. It may not go in the trajectory, it goes up and down. वो ठीक है, सब ठीक है, बढ़िया है, but why we are studying this, right? Why you I am teaching this, and why you are spending your time studying this is the important question which will come. So now this is to be linked to the enthusiasm of the buyers. Okay, now I will just, the person, this trajectory is 15%. The person who is ready to pay 120 rupees here, okay, if the person is 120 paying here, he may not be enthusiastic to pay within 3 to 4 days 140 rupees, right? So I'll just explain you in one example. How far the price will go is depending on the value and the price and the perceived price of the players in the stock market. Can I have yes? If so far so good? The concept is like, if you are clear with the concept, what I'm driving at, right? We are not at a, in an ideal world. People are enthusiastic and people are cautious and people are ideal also. So we have all three types of people, and by virtue of their taking decision, the price will go up and down. Now, one more thing is, how many of you do a job? How many of you do job for some company or something like that? Yes, no? Can I have yes? Great, fantastic. Now my question to you is, those who do job, abhi, as you are aware, some Ukraine and Russia fight is going on, right? Some Ukraine Russia fight is going on, and because of that, America is also jumping in. Okay, no, you cannot fight. I am here. You should not fight, and all. That is happening. Then China is sending 30 warplanes, aeroplane, like fighter planes, above Taiwan, and they are just making a sortie above the airspace of Taiwan and coming back and challenging Taiwan. And USA is saying, no, you cannot do like that. Correct? Drones in the Middle East and all. And market is jittery, it is falling down. But if you see the real world, those who are working in the job, all this is happening. Tell me honestly, do you get a circular ki, oh ho, now the Ukraine fight is going on, now the drone is happening, now the China is happening, now the picture is gloomy, you people have to work more than what you are working right now? How many of you have got this circular in the office? Anyone has got in entire professional life? No, right? Companies work on their own pace. If Hindustan Liver has to make soaps, it will keep on making soaps, and it will keep on selling the soaps, right? Correct. And if Triveni Engineering has to make sugar, it will keep on making the sugar. They will not tell the employees, no, Ukraine crisis, you have to work more. Okay, now the Fed has reduced the interest rates. Now it's a happy season. It's okay if you don't come for 2-3 days to office, relax, enjoy. No, right? We keep on working the same pace. The industries work in the same pace. It's only in the anticipation of something may or may not happen in future. Many times people react out of these three people what I spoke, right? Some people are enthusiastic, some people are not so enthusiastic. Some people are normal. So people react basis Ukraine and then they panic. नहीं नहीं यार अभी हो गया हो सकता है क्या पता नहीं क्या होगा. Nothing happens, right? We have been working in professional world. No company will tell their employees that Ukraine crisis, Taiwan crisis, missiles in Dubai. Now you might lose your job. Has anyone got a mail something like that? Boss, itna crisis ho gaya. Now you are fired. Okay, now the situation is good. You are hired back again. Nothing happens like that, right? So it's all emotional reactions, corrections which keep happening in the stock market, which creates the opportunity. The best part is all this happens because of a lot of things, but underlying, I'll summarize in two points. One is underlying industry keeps on working. If you are working in a job, you'll know it hardly matters. Even if there is a Ukraine crisis, Taiwan crisis, Middle East में दो चार मिसाइल भी दाग दिया कोई फर्क नहीं पड़ता है. If you're going for doing your work, you will have to work. Even if Federal Reserve, Fed in US, they will reduce the interest rate, still nothing will happen in your company. You have to work in the same way. The companies work in the same way. It will keep on working. It day to day or even month, 2 month, 3 months activity will may or may not impact your working. In an ideal world, it should not impact the stock market, but it does impact the stock market, and that's how opportunities are created. And we have to understand this thing, that any fluctuation going very up or going down is a momentary reaction. If the company is a decent company, fundamental company, overall the trajectory followed will be the same. So two rules: one, you should choose to trade in a good companies. Two, ups and downs happen because of the human behavior, human enthusiasm about a price action. And day to day, I am saying monthly, month on month, or day on day, or maybe weekly or something like that, that happens because of the human behavior, human greed, human fear, human opportunity, ready to pay higher price, and like that. So that is the whole class. So don't worry if the markets is crashing. Just remember this thing: are you getting a firing letter from your company? If no, that means industry is working on its own. If you are going for a job, you are working normal. Hindustan Unilever, Maruti employees, Tata employees, Infosys employees, any other employees are working normally in their company. It's only the emotional up and down is happening in stock market. So you should not be worried. You have to look for the opportunities in this fluctuation. Can I have yes from all of you if you are, if this base is clear? Because like I said, I'm going to build up on a three-layer basis, right? What I'm explaining today, next Tuesday and Thursday, we'll be building on the same layers. We are building upon the same layer. So this is the basic price movement. This is how the price movement happens. Now, how it appears in the on the chart, right? How this enthusiasm appears on the chart, right? So price movement, as you see, you can see the chart. Uh, can everyone see the chart? Yes. Okay. As you can see this price. If you can see, this price went up, and afterwards from November onwards for almost 2 months it has gone down, gone flat like this. Agreed? If you see now, the price went up and it became flat. Now just hold on, this is a very challenging thing in this. Same way, if you see here also, the price went up, and from almost from here September onwards, 2020 onwards, it was almost flat, almost flat. It went down here, and then it was almost flat, then it went up, and sorry, extremely sorry for this whole. Okay. So let's see. The price, if you see, the price went up, the curve was flat, again it went up, it became flat. So if you see, there is a behavioral pattern of this price. It goes up, it remains flat, goes up, remains flat. Can you observe this? How many of you can observe this? Can I have yes? If you're able to see in all that fluctuation, all this fluctuation, the price actually went up, curved out, remained flat, then again curved up and remained flat. Is this type of behavior just hold on. This is a funny thing with the paintbrush in trading view. Is this behavior, in this behavior, is it similar or only limited to escorts? Let's see. Now again, if you see in this is a crystal, again if you see, it is following a same or similar pattern. It goes up, remains sideways, again goes up, remains sideways. So it goes up and curves out, goes up and curves out, right? How many of you are agree that it is following the same pattern? Let's say if we see one more FLA, right? Again, you will find it will go up, curve, go up. Of course, this correction is sharp, but normally it will curve like this. So there is always a up movement and a curve, up movement and a curve, right? This is how all the instruments in stock market, this is how they will work. And what now I'm going to explain you what is the psychology behind this price movement, right? And we have to link it with the enthusiasm of the traders. We have to link it with the enthusiasm of the traders. Okay, so now tell me one thing. Let's take one example. Okay, so and I'll take one simple example, and I'll give you two examples. You have to understand from the point of view of enthusiasm. Like I said, in an ideal world, the price should go in a straight line, but it goes up and goes down, goes up and goes down. It forms a tapering. So we have to understand the psychology behind it, why it is happening. Now, let's assume, okay, let's assume how many of you go and buy tomatoes in the market? Anyone has, how many of you have experience of buying tomato in the market? Or at least ordering on the app, okay, home delivery, deliver 20 kgs, 1 kg, 2 kg. Okay, now let's assume at the place I am staying, there are around 1600 apartments, flats are there. 1600 flats are there. If tomato, if the tomato price today is 20 rupees, and where I stay here, there are around 1600 plus flats. So mostly, let's assume everyone is eating tomatoes, right? 20 rupees kg, everyone is ordering, okay, 1 kg, 2 kg, depending on their requirement. They're ordering, everyone is in ordering here tomatoes. If tomato becomes 80 rupees a kg, right? How many of 1600 flats, people in the 1600 flats, will the enthusiasm to buy tomato will go up or go down? Enthusiasm, will they be enthusiastic? Yes, it is 80 rupees, I want to buy more. Or some people will say, yaar chodo yaar, we will use only while making some vegetable curry वरी बनाएगा तब उसमें डालेगा टोमेटो, अदरवाइज सैलेड वगैरह रहने दो, सैलेड बाद में खाएंगे, थोड़ा सस्ता होएगा तब खाएंगे, right? No, don't buy, right? They'll say don't buy, or buy basic, जितना टेस्ट के लिए है उतना चाहिए उतना लो. So enthusiasm of the buyers, since acha, second thing, has the value of tomato gone down? Value, nutritional value of the tomato, has it gone down? It has not gone down, right? Tomato will have same nutritional value, only the price has gone up. And people feel that the price is too much for the value tomato is offering. See, now you have to correlate between the value and the price. When it was 20 rupees, same value, people were enthusiastic to buy. It has gone up to 80. The value has not increased, right? The value has not increased, the price has increased. So their enthusiasm, oh, nahi yaar, theek hai, abhi nahi lene ka hai. It's not principle of demand and supply also, right? So I got this but don't take it as a demand and supply is there. Let's say when it was available for 20 rupees kg, 100 kgs was available outside. Today also, if it is 80 rupees kg, 100 kgs is available outside, right? The availability is there, but the enthusiasm for people to pay higher and higher price is not there. If it goes to 250, if it goes to 250 out of 1600, can I say 60% people will stop even eating tomato? Bole jane do yaar. We will say, okay, what government doing this, that, and all. Maybe majority of people will say, I don't want to eat tomato. In fact, I don't like tomato. Wo to my mother forces me. That's why I eat tomato. Otherwise, I don't like tomato also. Right. So people will start saying that. Now, see, this is the enthusiasm. Now connect this with the enthusiasm, and you'll realize if someone is sitting and drawing the chart, you'll see that as the price exceeds the value, as the price exceeds the perceived value of, see, this is a perceived value. We don't know whether the value of tomato is 250 rupees or even 5000 rupees. We don't know. There is no perfect formula, because how many of you have used 5 paise or 10 paise in their life? How many of you have used 5 paise or 10 paise? How many of you have purchased tomato at 10 paise per kg? Yes. Okay. So all this saying I did and I did are of similar age of mine, or maybe elder to me. 1 paise, fantastic. So we have people who have used 1 paise also. I have not used 1 paise. My life started with 5 paise and 10 paise, and I have purchased tomato for 10 paise kg. 10 paise kg to today 20 rupees a kg. The value what tomato was giving in my childhood was also same. Today also it is same, right? So we don't know what is the exact value versus price. Same is with the companies. It is very difficult to find the exact valuation of the company in terms of share price. It's a discovery of valuation, right? It's always a discovery method which is happening. Why I said I didn't want to impress कि नहीं नहीं मैं बहुत पुराने जमाने से हूँ और 10 पैसे में खरीदा, ऐसा कुछ नहीं है. I wanted to just impress upon that the tomato, what was available in my childhood for 10 paise per kg, and today it is 20 rupees per kg, the nutritional value has not changed. The accepted value of tomato has changed from 10 paise to 20 rupees because of various reasons. Salary has gone up, inflation, everything. But today we accept, okay, 20 rupees per kg, we accept, right? 20 rupees we pay. So it is accepted value. That is a baseline. Okay. From that baseline, if suddenly the price goes up to 250, it becomes unacceptable to us, right? The enthusiasm of buyers becomes, यार ये बहुत महंगा हो गया यार, I'll not buy. The enthusiasm reduces. So the price shoot up gradually will come to a point where the enthusiasm of buyers will die down, and buyers will be willing to give lesser and lesser price, and the price will start tapering, unless until there is some news, some information, or some more value addition to the tomato, where the buyers feel, ha, abhi ye value addition ho gaya, tomato instead of red, if they start coming with red, and maybe some mixture of some additional protein or some calcium or something is coming in that, people will say हाँ यार ठीक है अभी इसमें थोड़ा और additional calcium आ गया है from okay I'm willing to pay more. So prices will hit a notional barrier because the buyers will not be willing to pay higher and higher price. That's why the price goes up, it tapers down, it moves sideways for long duration, right? Same happens with the share. If share was available for 100 rupees, today suddenly if it is available for 200 rupees, the buyers will not be very enthusiastic. They will say, "यार अभी तो 100 rupees का था, it has become 200," and the buyers may not be willing to pay higher and higher price. As the enthusiasm of buyers stops, enthusiasm dies down for buying the share, the curve will happen in stock market. Price movement, like I shared in 2 3 examples here, starting with escorts. See, this is one example where the price went up from 1200 to 1850. It shot up. It went up. Okay, it was acceptable. Now at somewhere 1800, the buyers are not very enthusiastic to pay higher price unless some additional value addition happens to the escorts, which is worth making 1800 as a baseline and taking it further. Till that time, if the price is going like this, there's a likelihood that it will move sideways. It might also correct, it might also come down, because buyers are, if they are not enthusiastic, if it has gone to 250 rupees and it is working at 250, the sellers will also realize that at 250 में बेच नहीं पाएंगे, will not be able to 250 sell at 250. So what will happen is sellers will start offering for a lower and lower price that tomato. So 250 tha, then they will offer lesser price. They'll say okay, we will sell the tomato for 80 rupees. So suddenly the people who are not enthusiastic about the buying the tomatoes, they'll start buying the tomatoes, and the prices will go down. The sellers are ready to pay a lower price. But there will be one point, you must have heard the sellers. If you go to market nowadays, you don't we less people go to market, but if you go to market and if you are not ordering online app, or if you are not going to mall, how many of you still interact with the vegetable vendors sitting on the street? Yes. If the prices goes down, after a point they will say, boss इतना तो हमारे घर पे भी नहीं पड़ता, हमको घर पे भी नहीं पड़ता है, I will not sell below this. Yes. See, if you are in stock market, those people who are in stock market, they should actually go and buy and sell in the vegetable markets. I'm telling you, that is a real life experience of stock market. You'll understand stock market better if you come out of your apps instead of buying online. If you actually go in the market, sabji mandi and all, or to kirana wala and all, to buy your grocery products, don't go to malls. Okay, don't go to malls or something. We still have those markets, grocery market. You'll understand the feel of the market better if you buy real life in there, right? So there will be point where the seller will say, a seller is not enthusiastic about selling at a lower and lower price. He will say, boss 20 रुपए हो गया बस, इसके नीचे हम नहीं बेचेंगे. इसके नीचे, you must have seen people throwing away the tomato on the road. It's rather I throw it away than sell it at a lower price, right? So that this is the point where the seller's enthusiasm ends. There is where the price starts curving like that. इतना स्टोरी मैं क्यों सुनाया? क्योंकि this will happen on stock market live, right? This is how, this is the basic pattern of stock market. It will start going down, it will start moving sideways. See here also, if you see, the price went down, then it moved sideways, because here is where the seller's enthusiasm has gone down and buyer's enthusiasm has come in. So this becomes an equilibrium point where the sellers are also not enthusiastic to sell any lower price, buyers are okay buying at this price. This equilibrium forms, the price stabilizes, and then it goes up. The moral of the story is, if the prices are going up and if they start moving sideways, you have to be cautious. If it is going down, let it go down and start moving sideways before you jump into the stock and buy at a lower valuation. These are the points where they are moving sideways. These are the points of support and resistance, which we'll cover in the Tuesday webinar. But this is how the price moves. You have to look at it as an enthusiasm of buyers, readiness to buy or willingness to sell at a lower price or not. So this is the basic price movement. There are further refinement of the indications and all. We'll use indicators and all how to use it. But back of the mind, you should be aware that the price movement is not some magic or someone is controlling. It's purely enthusiasm of the buyers, sellers, and the value of the company. All three plays role into this, and that is how it starts reflecting on the charts, and that is how the price moves. How to know, okay, whether it will go up or it will come down? Like Dixon, if you see, okay, Dixon Technology, again it went up, moved sideways, and now it is suddenly it has gone down. So you'll be able to make out, as you understand it in more detail, whether it is likely to go up or likely to come down, how to take a decision. You'll be able to take it as per this. But this is the basic price movement. Can I have yes from all of you if the basic price movement, and you are able to understand the link between the price movement, how it looks on the chart, and related with the enthusiasm of the buyers and sellers, right? That is happening to all. That is a cycle, right? You have uptrend, sideways movement, either downtrend or sideways movement, again uptrend. This keeps on happening. This is how the price moves, right? So great. Okay. So today I will not take a question because I need to wind up and attend to something urgently. So what we will do is this next step to this. The next step to this is support resistance. On coming Tuesday, I'll be taking you through the support and resistance. We'll take the questions of today and support resistance together. Fine. So great. Thank you so much for everyone for joining today. Do remember to join today's webinar, Tuesday and Thursday. Okay, 3 webinars combined. You have to understand all 3 as one package, trilogy, right? Like movies trilogy we are having. You have to understand all 3. Then you will get a good picture, good understanding of the price movement of stock market. So thank you. Thanks a lot. See you on Tuesday.